Welcome back to the channel, guys. I just got the email notification my day trade on Chef JPY closed out with $100 and $107.65 net profit, or about 0.25% on my funded account. So in today's video, as you can see, it played out in 2 minutes. I'm on the 1 minute chart. In today's video, I'm going to show you the trade and break it down as to why I entered into the short position. Let's get into it. So I always start my technical analysis for each Forex pair up on the weekly chart. And I use the weekly, the daily, and the 4 hour to determine my trend and kind of like my overall macro opinion on the market. So as you can see, weekly, very bullish. Price action is pointing up. Many breaks of structure to the upside. One there, one there, one there, one there. Bullish momentum on the weekly, so we're bullish. Daily, similar story. Price action is going up. Higher highs, higher lows. Again, multiple breaks of market structure to the upside. Same story as the weekly. So I am bullish on the daily as well. And I like to write it down just to keep it in the back of my mind and right in front of me of my trend and where I know the market's going. And I use that to kind of like aim for areas of my day trades. So 4 hour is also bullish. As you can, where did that go? 4 hour is also bullish, same story. Higher highs, higher lows. Price is just overall going up when you look at it. And breaks of market structure. So I use the most recent 2 to 3 breaks in market structure to determine my trend direction. And I also don't like to make it too complex. If price just looks like it's going up more than it's going down, I tend to be bullish. It doesn't have to be too hard, and all 3 need to be lining up for me, but I also don't mind if 2 lines up. As I'm only calling minor moves in the market and a smaller take profit as I use a negative risk to reward ratio, I don't pay too much attention to the weekly as it's quite a macro time frame, but definitely the daily and 4 hour for my trend. And then on the 4 hour, what I do is I pick my long targets on the higher time frame for swing trades. So the most recent bullish range is from this swing low to this swing high. And I already have that marked up, so I'll delete that one. But the reason this is the most bullish range is it's the most recent break of swing market structure. So a swing market structure are the most extreme swing points on the chart. So explain how I work this out. So we had a high here, we went down. So that's swing point 1, market swung down here, and then it swung up and broke the swing point here. So that's the new swing point. Let me mark this one up. Never know where the tools are. Yep. So 1, 2, 3. The market retraced down below. Made a new swing low. Made a new swing high. Swing low. Then from that low to the new high that breaks the market structure is a new swing point, and that's how I draw my range. So from swing point to swing point. And I do that on any time frame. Doesn't matter if it's the weekly, daily, 4 hour, or 1 minute. I use the extreme swing points in the market. So for my swing strategy, also using negative risk, I'd be looking for longs down on the 61.8 level. So that's my macro target. As you saw from the start of the video, I am actually in a short position, so I'll explain why. So high time bias is bullish, and I'm also looking for longs. However, to get more trading opportunities, I also counter trend trade on lower time frames, and I trade it down to my higher time frame target. So dropping down to the 15-minute, price action went up, made a swing point on the 15-minute, went down, then swung back up again, and that's where we drew our fib. But then we broke that swing point and started trending down, and that's why I'm shorting. So on the higher time frame, I believe price is aiming down for a lower entry, so I trade the market down to that lower entry, then I trade it back up. And same thing as the 4 hour, just do it on the 15-minute. So we had the swing point, swing point, swing point, swing point, swing point, and then we had a change of character, swing up, it broke, swing down, and down. So I actually decided to draw my range just from this one, as it is quite a marginal difference in where my limit order would have been set. It worked for both. However, I picked this one as it made the 61.8 level line up with some nice support and resistance on the 15-minute, and also the 50 EMA on the 15-minute chart. So it's an area of confluence. As you can see, my TA was spot on, and go down to the 1-minute chart, price shot up, hit my entry, and shot straight back down. So I could have grabbed a larger chunk of the move. However, so it went to nearly a 1-to-1 risk to reward ratio. However, my strategy is just to be in and out of the markets and target a smaller win of 0.25. As I know, over time, consistent smaller wins, they build up, compound the account, and are more likely to hit my take profit more than my stop loss. So I explained why and how and the logic behind why I used a negative risk to reward in my previous video. So go check that out. But yeah, that's the trade, that's the logic. Nice and simple, $100 in and out in 2 minutes. So the FTMO is in a good position at the moment, about 1.25% up from when we started using negative risk to reward ratios. So on higher time frames, I do risk 4% of the account to make 1%. On these lower day trades, because of leverage issues and also the smaller range, I just use 1%. So I risk 1% to make 0.25%. Now, while I'm doing my day trading, I'll also show you 2 other positions I'm interested in. Got AD, USD, same logic. On the daily, we're long. Weekly, daily is bullish. 4 hour was bullish, but I believe it's swapping over to a bearish bias and going to trend down to our higher time frame targets. And that's why I'm in that short position here. And we also have the equal lows here for price to target and take out. So I'll update you and see how that one goes. And the next one is New Zealand USD, which I'm actually thinking of cancelling, just as price has just missed my limit order and it's not worth the risk, just as we already made some money on Chef JPY. I'm not too confident about a second bounce on this one now, as it is the first break of market structure to the upside. But the same concept applies. So weekly, using the swing points, the market's trending down. Daily, same concept, trending down. Got my daily range. Price has to retrace to get up to some long-term higher time frame targets where people will be shorting again. And on the 4 hour, it's the same, bearish. Price is due for a retracement, and I just trade counter trend up to that zone. So I'm going to quickly cancel that limit so I don't get tagged in. Awesome, that's all cancelled. But yeah, same concept. So it was trending down. We had a nice liquidity grab of those equal lows, broke the market structure, nice support and resistance zone, fair value gap at the 0.618 level, and just targeting that 0.25 RR move, which is only 2 pips. And we just missed the first entrance, and that's why I'm cancelling it. I do still think this trade could work. Missed it by half a bip, but I'm not being greedy. I made the money on Chef JPY, and we'll just see how this one plays out. Thank you for watching, guys. We'll see you in the next video.